They say time is money, but time might even be worth more. Why? Because between inflation, currency devaluation, and unpredictable economic shifts, your ability to plan financially by age matters more now than ever. And the earlier you start managing your money wisely, the more freedom you'll create for yourself down the road. In this video, we'll break down how to manage your finances in your 20s, 30s, and 40s, what to do, what to avoid, and how to build wealth at any stage of life. Whether you're just starting out and wondering when to start saving, investing, or thinking, when should I start planning for retirement, or even feeling like you're behind, this video is for you. Hey lovely people, welcome back to Money Lessons with Debbie. On this channel, we talk about personal finance and we break down money matters that affect our everyday life. Let's get into it, shall we? First, let's look at your 20s. Your 20s are for building the foundation. Your 20s might come with NYSC for those in Nigeria, your first job, or maybe your first business. It's easy to feel like money isn't enough, but this is when you lay your foundation. These are the things you can do in your 20s. Create a realistic budget. Use the 50-30-20 rule if you can, or any other budgeting style that suits your lifestyle, but many Nigerians work with even tighter margins. The goal is to track your spending, whether it's on data, transportation, or family tax, and allocate money with intention. Apps like Piggyvest or Excel can help. Next, build an emergency fund, even slowly. When building your emergency fund, you have to decide how much should be in it as regards to your lifestyle and what you spend money on. Aim for at least 1 to 3 months of basic expenses. For example, the goal might be to save 100,000 naira. Even 5,000 naira or 10,000 naira a month can build up. This is your safety net for health issues, job loss, or an urgent trip to the village. Even small savings, weekly or monthly, can add up over time. It's about building a safety net for unexpected situations. 3. Start investing early. You don't need millions to invest. Use platforms like Cowrywise or Bamboo for beginner investing. Mutual funds from ARM or Meristem. There are so many other options to choose from, not just these two. Make your research. Consider government instruments like treasury bills and bonds. They are safer and often beat inflation. 4. Avoid toxic debt. In Nigeria, loan apps, payday loans, and overdrafts are becoming common traps. Stay away from fast money with high interest. Instead, use Ajo, Asusu, or cooperatives that offer community-based lending and saving options. High interest debt can cancel out your progress. Only borrow what you can repay without strain. And number 5, learn financial literacy. In your 20s, this is the most important thing you need to learn when it comes to your finances. If you want to build wealth, financial literacy is a no-brainer, and you don't have to get all the knowledge in one day. We all keep learning, right? So, I'd suggest you follow creators, read books, and take free online courses. Knowledge is your currency, and unlike the Naira, it doesn't depreciate. You don't have to be rich to start, but you definitely have to start to get rich. Now let's look at your 30s. Your 30s are for acceleration and stability. By your 30s, life starts moving faster. You might be getting married, supporting parents, or raising kids. The economic pressures are real, but so is your potential to build wealth. These are the things you can do in your 30s. Focus on increasing your income. In Nigeria's economy, or in any country's economy at all, earning more is often better than saving more. Learn new skills, seek better job opportunities, or add a side business. Your earning power is your most powerful financial tool in this decade. Learn high income skills like tech, digital marketing, finance, Consider freelancing or remote work via platforms like Upwork. Use AI tools, content creation, or side hustles for extra income streams. 2. Be intentional with spending. As your income increases, don't let your spending grow faster. Prioritize building wealth, not just upgrading your lifestyle. Create saving goals for things like home ownership, travel, or business. That 200,000 naira salary won't stretch if you're trying to live like someone earning 600,000 naira. Stay humble and invest more instead of spending more. Invest more consistently or contribute to a pension plan and track it. At this stage, you should be contributing regularly to retirement or long-term investment accounts. Look for tax-advantaged options. If you're employed, check your PENCOM statement. Many Nigerians don't track their pension contributions. Are you self-employed? You can register with micro pension scheme via licensed pension fund administrators. 4. Get proper insurance cover. Health and life insurance. Seriously, you should. Medical emergencies are a major cause of death in Nigeria. Health insurance, life insurance, or even disability coverage becomes more important, especially if you have dependents. It's not just about protecting yourself, but those who rely on you. Get registered with a health insurance scheme provider like NHIS, AXA Mansard, or any provider of your choice. There are so many to choose from. Life insurance is available for as little as 3,000 naira per month and helps protect your loved ones. You don't need millions to have a life insurance. Prepare for major expenses. You may be planning for children, school fees, buying a car, wedding, a land purchase, or starting a business. Whatever your goals are, start saving for them intentionally. Use targeted savings plans or fixed deposits to meet these goals. They also add interest on your money, so it's a win-win. Avoid going into debt for avoidable expenses. 6. Clean up bad debts. Start by paying off those loans, cooperative deductions, or business debts. Consider debt restructuring if needed, especially with dollar-linked loans. Make a strategy to pay them off. The less you owe, the more freedom you have. In your 30s, your focus should shift from just earning money to growing and protecting it. If you don't tell your money where to go, it will disappear without explanation. Okay, now let's look at your 40s. Your 40s are for consolidation and legacy building. Your 40s are about strategy. You've worked hard, now it's time to secure your future, reduce risk, and plan for long-term success. By your 40s, you're thinking legacy, retirement, stability. Ideally, you should start preparing for your retirement when you become aware of it, but the Nigerian economy doesn't make it easy. You have to outthink inflation and outsmart instability. These are the things you can do in your 40s. Maximize retirement savings. Track your retirement savings account regularly. If you've changed jobs, consolidate your pension. If self-employed, increase your micro pension contributions. Use pension calculators to estimate your retirement targets. 2. Diversify or rebalance your investments. If you've only been saving in Naira, now's the time to diversify. Shift your portfolio to a mix that balances growth and safety. You may want less exposure to risky assets and more focus on stability and income generating options like real estate, dollar investments via platforms like RiceVest or Bamboo. Balance your risk between Naira assets and foreign investments to hedge against currency drops. 3. Become debt-free or close to it. Your 40s should be your cleanup decade. Whether it's mortgage, car loans, or cooperative debts, start working towards a debt-free lifestyle. 4. Set a retirement number adjusted for inflation. Retirement isn't about chilling, it's about safety and freedom. Factor in future inflation, housing, medical needs, and possibly supporting family. Break it down into monthly or annual goals. 5. Get a will or estate plan. Don't let family fight over land or money. Work with a lawyer to set up a basic will, guardianship directives, and next of kin documents. You can also use trust services offered by some Nigerian banks and PFAs. If you already have a will, make sure your will has updated beneficiaries and possibly long-term care or life insurance. Even a basic plan can reduce family stress and protect your assets. 6. Secure your family's future. Whether it's helping kids through school or supporting aging parents, plan ahead, separate short-term and long-term goals so you're not caught unprepared. Save for your children's education with EduTrust plans. Teach your kids about money so the generational cycle changes. At this stage, money should be working harder than you. Building wealth is about smart decisions, not just hard work. No matter what age you are right now, it's not too early and it's not too late. Every stage of life comes with financial opportunities and challenges. But no matter your age or income, whether you're working in tech, teaching, trading, or trying to just survive, the earlier you start planning, the better your future looks. If you are in your 20s, build habits. In your 30s, multiply income and protect your future. In your 40s, clean up, invest, and plan for legacy. I hope you learned something from this video. And if you did, leave a comment below and share with us what money move are you focused on in your current decade. Thank you for watching. Until next time, remember, plan carefully and you will have plenty. If you act too quickly, you will never have enough.